Welcome back. Now, yesterday, Nedbank opened its books, revealing a tepid 2% rise in headline earnings to just over 17 billion rand. Today, Africa's biggest bank by market value, FirstRand, reports an 11% increase, normalized earnings to a record 23.2 billion rand. The total dividend has been hiked by 18% to 259 cents per share. Kokkie Kooyman, banking analyst at Denker Capital, joins us with his reading of the performance and what the first two sets of banking earnings reveal about the industry as a whole. Kokkie, hi, good to be with you. A big question for you. If you have a look at the general picture of FirstRand, I mean, generating 7.8 billion rand in net income, these are solid results.
Yeah. No, I think solid is the operative word. If South Africa starts growing the rate it should, then we're going to see much better results going forward. But under the circumstances that we've seen, last year is still tough. The consumer is still under pressure, although interest rates have started coming down. Oil price, petrol prices started coming down, inflation, but still consumer under pressure. And for both these banks, Net and FirstRand, their African operations are not big compared to Absa and Standard Bank. And you'll see when they report, the African operations have generally been carrying the SA banks. But nevertheless, FirstRand, very good result, rather solid, but under the circumstances, good. UK still also was quite a tough environment. But I think what really carried FirstRand is, firstly, you can see their very, very strong deposit franchise, and also treasury enabling them to improve the net interest margin versus Nedbank's net interest margin, which contracted, which normally happens when interest rates come down. And then also the bad debts in both cases, very well controlled, only in fact a 2% increase for FirstRand in bad debts, with loan growth 3 to 5% increase. So that's very good. And then cost control, both of them very strong cost control, operating expenses going up less than revenue. And then as you mentioned, I think for FirstRand, a good sign is earnings up 10 or 11, depending on the definition of earnings, but 10 or 11, but dividends up 18%. And that's a sign of confidence in their capital position.
Yeah. Tell us more about that strong top-line growth. Looking at the results statement, picking that up, strong top-line growth for FirstRand. That's quite refreshing for them.
Yes. So loan growth is still reflecting the environment, 3 to 5%. They've actually got a policy now where they what we call originate loans and then sell it off. So total loan growth was 5%, but what they keep on the books is 3%. Now remember, that's more or less where inflation is. So that's still actually fairly low. UK also about 3%. But a lot of the income, the extra income, came from fee income, which was RMB. The insurance side did quite well, but also some trading income, which that's obviously not sustainable. But so the RMB side helped there quite a bit. What is interesting, if you look inside, they are seeing stronger vehicle originations or vehicle demand for vehicle loan growth. That is actually quite good. And also agriculture, specialized finance and working capital needs are picking up. So that to me points out that the SA economy, which we can see, is starting to recover, starting to grow, but we'll come back to that later, I'm sure, when we look at the outlook statement.
Yeah, absolutely. I mean, Westbank, like you say, doing very well, and it just shows the robust nature of those vehicle sales, which is great for them. Yeah. Partly as well, don't ignore the fact that a lot of that is driven by the Chinese imported vehicles, which are a lot cheaper, and a lot of people making use of the cheaper. But still, in rand value, Westbank grew 11%, despite actually, I'm not sure how much of a switch there is from expensive to cheaper vehicles. But the demand for vehicles is picking up, which is good for the economy. Kokkie, I want to go back to what you were talking about, the African operations. And as we know, we got Nedbank. They're going off to Kenya. They've got their big bank investment there. But some headwinds for FirstRand. Having a look at Mozambique, Botswana, also Ghana as well. Those are weak points, aren't they?
Yeah. Botswana was the worst, and I'm not sure if the listeners or viewers are totally aware of what's been happening in Botswana. They've been really badly hit by the collapse of the diamond market. And that's because of fake diamonds suddenly. So the diamond prices have collapsed, which means Botswana economy was largely driven by diamond mining. And so obviously the economy has taken a hit, and FirstRand along with that. Mozambique is more different because of the ongoing political problems they have, or more with the insurrection on the northern part. And so that actually just prevents Mozambique from realizing its full potential. And Ghana was the lesser of the three in terms of, but that's also a very volatile economy. It just doesn't, it's got all the promise but doesn't get going.
Yeah. Now, with the spotlight on FirstRand and FNB today, what's your general take? Where do they fit into the banking ecosystem? Because at the moment, it's really tough. We have Capitec trying to get their share. They're all having a look at what they need to do. Where do we find FirstRand?
Yeah. So what makes FirstRand different in unfortunate negative light, I mean, Nedbank had the problem of investing in EcoBank. I forget, was it 10, 12 years ago? Mike Brown made that decision to get Africa exposure by buying a 20% stake in EcoBank, which gave them exposure to a lot of African countries, but it never really worked because they didn't have control.
Yeah.
FirstRand, under Johan Berger, made the decision then to buy a stake in a UK bank, Aldermore. Now, they had already had a vehicle financing operation there, Moto Novo, and they battled with getting deposits, and they thought buying a bank will help fund the vehicle finance operation.
Right.
And that has been a drag on FirstRand, firstly because the return on capital has been much lower, the UK having considerable problems. I mean, just the government is just not getting it right, but also the whole motor vehicle case where there have been large claims against the financiers getting kickbacks, and so FirstRand have continuously had to provide for potential claims and penalties, and now again there was a 333 million set aside for legal costs. Now it looks as that's almost out of the way, but sadly for FirstRand, were they to sell Aldermore, a bit like Nedbank did with EcoBank, then FirstRand, basically SA Bank, with still very small African exposure.
Now you see, Kokkie, we'll have to leave it there, I'm afraid. I think it's a much wider discussion, actually, unpacking what's happened with FirstRand. But it's been great to chat to you and great to talk to you on this day of FirstRand's results. Thank you so much. That was Kokkie Kooyman, banking analyst at Denker Capital, with his assessment of FirstRand's numbers.